So this recording will be sent to YouTube. So if you're not subscribed to the YouTube page already, make sure to do that for me. That would, greatly appreciate it and whatnot. Trying to get at least to, 50 subscribers by the end of the month. So any support is appreciated with that. So first things first, as always, before checking the charts, right, you want to check Forex Factory or my FX books, whatever you use for news, and just see what you have, news-wise going on in the market. So tonight we have 2 o'clock GBP news at 2 a.m. And then we have 5 a.m. Euro news. And then in the morning at 8:30, we got USD news as well. And pretty much JPY look like it's going to be on alert all day as well. So as far as our main pairs that we trade, GU, EU, the GBPs, GU, we should see that be pretty active tonight with GBP news at 2 a.m. So going into London session at between, going into that 3 o'clock, 3:30, we should expect to potentially see some moves play out to start the week. So that's looking at the GBPs and just looking at our news at least to, for tonight and tomorrow's session. So now going into the charts, more so today is just like I said, going over having our training. Not too much had gone on in the markets yesterday that you really would have been trading or looking at, because it was like I said today, yeah, today I guess, still the same day. But like I said, these previous London and New York sessions, like there wasn't too much going on in the market for you to be trading. So right now we'll go over just an overview of our institutional levels, time and price, trading plan, and just like I said, really just getting ready for the week. Call won't be too long. We'll get on and off and get ready for London session tonight and get ready to like I said, make it a good week. So let's see. So kind of what we did talk about though yesterday as what we were looking for with the DXY, that we want to see the DXY drop down to clear out those lows from last week. This was Friday's low, and then potentially start going bullish into this week, right? So today, even though like I said, it was a holiday, the market still moved, but it kind of just opened up and it consolidated in the same area pretty much all day. So now though, just off of how it opened up to start this week off, what can we potentially be seeing with the DXY going into this week is a potential pullback, and then it might come and bounce off a structure somewhere inside this area and then go for what? Start to go for these highs after going and taking out these lows, right? So if structure is respected, then we're going to start seeing the DXY bullish structure start going into play, and you start having targets for where the DXY can reach up to. So if we see that potentially going on with with the DXY and it potentially going bullish, what we'd be looking for with like EU, with EU and the EU and GU going into this week. What are we going to be potentially looking for? Is for
Bearish.
bearish momentum overall to come into play, right? It might be some short-term buys to buy up, but as it starts to buy up, we may be seeing this bearish structure start coming into play. And when we look at this in the last few weeks, and we're just looking at how the market has been moving with EU, it has been what for a good amount of time. If we're looking at the higher time frame, and we're just looking back at the last these are weeks right here, 1, 2, 3, 4, 5. We're looking at all these weeks. What has the market been with EU? It's been very bullish, right? Very, very, very much bullish, pushing to the upside. Now we can start to see it tried to push down a few weeks ago, came back up, took out the highs, consolidated a little bit, pushed up, and now we may potentially start seeing EU start to make that move back to the downside and start going for structure over here and start to test back down to these levels, right? Bullish momentum to start the DXY to start the year off. So looking at EU like that, and then when we come in, we also look at GU, and we're looking at this on like the 4-hour as well. We can see that same with GU. Just zoom out. What was going on with GU for a long time? Very, very much bullish, right? Was super bullish at the end of September. At the end of the year, GU was very bullish going into the year. But then we can see going into December, this is where December starts right here. What did GU start to do? Took out these highs all the way from the start of the year around July. Took out those highs. It started to drop down, was taking out structure over here. And now going at the end of December, start to buy up. But now at the same thing with the DXY, if the DXY is going to start to reach to the upside, we could be looking at that bearish structure with GU coming into play as well. And we're just coming in and zooming in. We have this bearish imbalance where it came, dropped down. So if this is respected right here, we're going to be looking to hold a GU type of play to the downside, take out these lows, these hanging wicks right here where the market never came back. And then this imbalance over here would be really great targets to start targeting with GU to the downside. If we get that respect right there. So, like I said, that's what we potentially will see is that short-term buys as we can kind of see how it is right now, in the day and whatnot. But going into like London, New York tonight and throughout the week, if you see that DXY going bullish, then you're definitely going to be looking to short it off of this candlestick, most likely with like a stop loss around where this Asian session was yesterday, and looking to take that back to that downside. So just potential moves on what we could be seeing going into tonight, and then looking at our institutional levels and whatnot. Let me kind of just get over here to this one. Looking at our institutional levels, it starts to kind of, like I said, it starts to make sense. Short-term buys to the upside might get another, 50, 60, almost a 50 to 100 pip push back to this upside. But if we see that respect up here, then we're going to be looking to come back down, target these lows, target all these lows, and we can see how big of a drop to the downside it is. So we'll be looking for some type of setup, some type of sell setup, somewhere in this area up here to take that back to the downside, risk about 20, 25 pips. And even if you low lot it and then you get that bearish momentum, then you can get in on a pullback, have your stop loss at the new high that's formed, and then get in that trade and take it to the downside. And it might not go all the way to the downside in one day. We have a lot of news throughout the week. So it's just a matter of, like I said, securing your 25, 30, 40 pips, coming back at it the next day. When it pulls back, then you're up for the week. You get in the trade with more confidence and you take it down for 50, 60, 70 pips. And you just stack throughout the week. The first trade of the week doesn't always have to be the home run. But like I said, it's a matter of just you following your trading plan more than anything. So that's looking at GU in that aspect and just looking at our institutional levels. EU, same type of ordeal. Let's bring up EU over here on the levels. Same type of thing with EU. We could potentially get that bullish, like we said, bullish momentum come in here and take out these short-term highs, these Asian session highs that never got taken out on both these days. Asian sellers, bam, came back, took out that high. Asian high was formed during, today, MLK. Day markets were closed. So then coming back to start the week, we could come and get that test, activate these orders at this big figure, potential 20 pip stop loss inside this area. And then what we look to do to take it from there. Take shorts, take EU to the downside, target these lows, and you could be easily looking at, 100 pip play all the way back to the downside from there. So that's what I potentially seeing happen. Like, it's been very much bullish momentum. We played the buys last week. We played the buys 2 weeks ago. 3 weeks ago, played the buys to end the week. Almost all week 2, played the buys. So, like you said, now looking at this, we could be looking at that potential one more push to the upside. We got 1 push, 2 push, 3 pushes to the upside. And then after that 3rd push, looking to take it down. So you kind of see, like I said, the base, 1 push to the upside, consolidate, 2 push, consolidate, 3 push, and then that's when you start to see that bearish momentum come into play. So short-term buys with EU, and then like I said, if you find that sell position, find a sell setup, it could be a good play to potentially look to play multiple times. So that's what seeing with EU, seeing with GU. Let's check out some of the other ones too, just to take a peek, because why not? Let's see. NU and AU as well. So let's check out NU. Kind of like the same type of scenario, right? It's been very bullish. We could look for one more push to that upside, take out these highs, and then it's going to be coming and testing back inside this bear structure. So I don't trade AU too much. I really don't like AU that much. I like to stick with GU and EU for the most part. AU moves a lot during Asian session, more than anything, and kind of will consolidate during New York. And that's like the same thing with trading GJ. If you're a GJ trader and you're not trading London, you should probably leave GJ alone and focus on a USD pair, because you're not going to get the right volatility that you're looking for by trading during, by trading only New York and trading GBP, JPY. So same with looking at NU, all going bullish right now. They're all going bullish right now. So like I said, we're going to see them short-term buys come in and induce buyers to get in long-term again. But after we see these highs come back and get tested, I would start to look for it to come and take them shorts back to the downside. And like I said, I like the setup the most because when we look at the DXY, a lot of those pairs, NU, AU, GU, and whatnot, they look super bullish. But then when you come and you look at the DXY, we can see that, okay, bam, it's closed right now. But when it opens up, it's going to gap down. But as it gaps down going into London and New York, structure is respected. This is just going to respect structure and start taking off to the upside. And then what are we going to see happen really fast with those NUs, AUs, GUs, and EUs? They're going to start dropping. So, like I said, I mean, I can't stress more than enough than, the importance of keeping your eye out on the DXY and having your bias with the DXY, and then just doing your markup and correlating it with your pairs so that, you make it make sense. And that's how you just truly trust your setups and you start to get in those trades. And, um, yeah, I mean, does anybody have any questions with any of like the DXY, EU, GU, or any of the pairs or anything that we just looked at as far as like our institutional levels? Um, or any of those setups or anything like that, like we just looked at. For the most part, I think everybody has a good idea of it. But like I said, feel free to unmute yourself if you do have any questions. As far as like you said, when we're looking for setups, it's just our time and price aspect of things, right? Just being very, very patient and waiting for your trades. We don't trade between 5 and 12 o'clock. After the Zoom call, after you do your homework for the day, about an hour, hour and a half at most of studying on the charts, you shouldn't be on the charts again until London session. That's between 5 and 12 o'clock. Right. So if you got a job, it's really no excuse why you still can't at least take, 30 minutes of the day every day to get on the charts because you know that you watch TV, TikTok, play the game, whatever it may be, you do it for 30 minutes. So that's why it's like, I mean, at the end of the day, everything is just a matter. There's always going to be excuses. And that's like the same thing with the trading and the mentorship. And I tell people this all the time, it's lifetime mentorship, but you realize a lot of the people, it's 50 people in the Discord that have signed up and paid for mentorship. But a lot of those people signed up for mentorship because it was cheap, quote unquote cheap, compared to what a lot of other people pay, whatever, for mentorship. It's cheap, so they paid the price while it was cheap, and then they never show up again. And then they say, "Oh, I'm gonna show up when the time is right." That's what everybody says. When the time is right in a couple of months, and I get this and this right, I'm gonna show up and I'll be ready to go. And then you look up, and 2 months go by, 3 months go by, 4 months go by, 5 months go by, 6 months, and then a whole year goes by, and you never showed up because the time was never right. The timing is never gonna be right. So you have to like truly figure out what matters and what doesn't matter to you on a day-to-day basis. Like trading matters so much to me. I don't do anything else outside of this on a day-to-day. I don't dedicate my time to anybody. I really do too much. Like I went to the snow this weekend and that was the most I've done in a really long time. And I only went for like 12 hours and I was right back on a Zoom call the next day, basically. So, looking at the charts, I'm getting ready for the week. So like I said, it's not to say that you can't have fun and live life and, do those things, but there does become a certain point of time of every day really of you have to have some type of balance because you can't just dedicate your time. Not like I told you guys, you should only spend about an hour at most an hour and a half studying the charts on a day-to-day basis because the more of it is also what do you have to actually be up to trade. We don't trade between 5 and 12 o'clock. No matter how cool it looks to trade sometimes and how smooth we don't, you don't do that. You don't want to build bad habits because on an 8 out of 10 basis, there's not going to be clean setups during this session. And you're not going to be around the trade at that because it's in the middle of the day. So you have to be patient and wait all the way until or boxed like this is our best time to trade. Anything to the right of this is the best time to trade. Anything to the left of it is almost like, it's manipulation. You can find money in it, but you have to be very careful with your setups and your trades and, take profit. If you're trading before at 1 o'clock early in the morning, because London session, New York session is probably going to end up taking you out your trade at some point. But everything to the right of it is actually, what's going to happen for the day and you can set yourself up. So, but the discipline of it is that this box is between 2 and 4 o'clock Eastern. So I know how it is in the East Coast. Like, trust me, I lived in Florida for a whole year. So I know how it is at 2 o'clock in the morning, having to trade. But the luxury of it is that New York session doesn't actually start. The third box doesn't start until 9 o'clock. So there's gives and takes for both because us on the West Coast, I'm on the West Coast right now. London session is from 11 to 1 o'clock in the morning, essentially. So that's almost doable every single day. So especially my West Coast people that don't trade London session, like I mean, and they stay up every single day past 11. I don't know too many people that go to sleep at 7, 8 o'clock on a consistent basis. So people that don't trade London on the West Coast are lazy. Um, and my just in true, and if I'm just being completely blunt, East Coast, I mean, I could see 2 o'clock in the morning, but at the end of the day, if you make it, if you make it your priority, you can make it happen. I lived over there and I woke up every day and traded London session for a whole year. So, I mean, you make it happen because you get time to sleep in the morning. Because at New York session for me, I have to wake back up at 7 o'clock, 6 o'clock in the morning, at 6 o'clock in the morning over here from 6 to 8, 6 to 8, 6 to 7 o'clock is the third box. New York session starts. So, like I said, I mean, everything is just a matter of excuses at the end of the day because everybody has the pros and cons of where you live at, your job, this and that. Like, and yes, sometimes, your job I had a job to where I couldn't look at my charts in the morning, during certain times during New York session because we had meetings or, you can't be on your phone, whatever it may be. That's why you use TradingView. It's why you set your alerts. It's why you take the 30 minutes to an hour a day to set your alerts because you're not supposed to be looking at your phone the whole time. If your alerts don't go off, then you don't trade. As simple as that. Like, so that's why, everything is just a matter of the habits that you build. Everything is a matter of the habits that you build. If your alerts don't go off, if your point of interest, if it's not at that point, then you just don't trade. So you wouldn't even, some nights, you don't have to be up all between 2 and 4 o'clock for the whole 2, 3 hours because if the market doesn't come to that point of where you want it to, you shouldn't be trading. Shouldn't be trying to force a setup. You only need 2 to 3 good setups for a week to have a successful week. And that's like the same thing with the live trading group. I don't know if some people think that we're going to be live trade, or people get the conception that you have to be around for every London and New York session. That's not it. We'll set a goal at the beginning of the week, catch 200 pips. We get on for London, we get on for New York. And you don't have to, like I said, it's not about some of the calls the last couple of weeks. We got on for 30 minutes and we are off already because that's how we found us set up at the right times. The market played out and you get on, you get in and you get out. Secure your pips for the day and go on about your day and come back at it the next day. So it's just about building habits that are sustainable over the long term. Anybody can just wake up and trade whenever they want, but a lot of people can't be disciplined and trade when they're supposed to. So that's all this year should be about, is about you forming good habits and forming, habits that are sustainable so that you're around all year, no matter, because you're forever learning. Like the learning thing is that you're gonna be doing that forever. I'm learning. Everybody's still gonna be learning forever. So that's like I said, the same thing of finding excuses on why you can't trade, why you can't do this, whatever, why you can't put $50 in the account and trade, but you're gonna spend $50 on food, clothes, X, Y, and Z that bring you no type of return or no type of anything. Even if you could put $50 in the account and make 20 bucks, that's great. That should give you the best feeling ever because if you put $500 in the account, that same 20 bucks would turn into 200. So all it is about gaining that confidence to make that leap. Everything is this like that's all you have to. If you could turn 10 into 20, you can turn 100 into 200. It's the same exact trade. It's just a matter of a different lot size, but that's not what we focus on. We focus on catching your pips and getting out, and that's all I want you guys to focus on is the getting in your market, catching your pips, and getting out. Because as time goes and you give it 2, 3 months, and you look up in 3 months, and you can catch 30 pips consistently on a day-to-day basis, and your lot size is a 0.50, a 1.0, you're getting in with 2.50s, which a lot of people are capable of doing. You just don't know it yet because you're too scared to do it, which is fine. But that's why you have to practice the right way because you just have to think about things. Like I said, you always have to really, really think about it. A 0.10 is $1 a pip. It's only $1. It's $1 a pip. So if you lose 20 pips, you lose $20. You lose 10 pips, you lose $10. A 0.25 is $2.50 a pip. You have that, right? Like you can save up for a week to do that for you to be ready for next week, right? To be like, okay, next week this is what I'm planning on doing. I'm not gonna eat out the $50 to $100 I spend. That's gonna be my lot size for the week. That's how many pips I can risk on this next trade. Instead of going to eat out tonight and spending 30 bucks, I'm gonna risk $30 in the market. So if I'm gonna risk $30 in the market and I'm gonna use a 0.10, a 0.15, a 0.25, how many pips do I got, right? Or how much money can I lose? And then if I make a good trade and I have a good trade, I'll go eat out the next day, maybe. But then you're going to get in that mindset of I don't even want to do that. I want to just continue to what I would spend. I'm gonna just risk that in the market instead. So there's just so many ways of thinking about things and thinking about the trading and like thinking about things as in pips. Like for a long time, we always counted things as pips in the chat. Oh, you want to go buy some new shoes? That's 20 pips with a 0.50 right there. And then you can go buy the shoes or go buy the game or go buy whatever. You want to go buy something on Sunday, wait until Friday and put that money in the market and see what you do in the market and test your skills and then go buy that at the end of the month. Even if you only make 20, 30 bucks and the thing costs 120 bucks, you still paid for some of it with the markets. So you just want to get in the habit of, really dedicating yourself to this by, like I said, by doing things the right way. And that's from not trading at the wrong times. A lot of people's biggest thing is they lose money before London even opens. If you've already lost money before London opens, your mindset is going to be terrible when the market opens and it starts moving fast at 3 o'clock, 3:30. You're not going to be patient. You're going to be forcing things. And then by 4 o'clock, you're going to be wiped out. But if you haven't entered any trades by 3 o'clock, by 3:30, and you haven't pressed that button once, you're going to be patient going into the night because you're going to be like, I'm just going to wait. And if I see something, I see it. If I don't see it, I don't see it. I'm not going to just throw my money away because I haven't lost any money today. But if you already lost money going into London session, you're done for. You've already set yourself up to be, playing from behind. And that's even when a lot of people I talk to, it's not an issue of catching trades, but when they catch a trade, we're finally playing from behind and you don't want to be doing that. And it's the same thing going into New York session. It's the same thing going into New York. If you haven't found an entry by 4 o'clock, 4 o'clock, 4:30 at the 4:30 at the latest, you haven't found an entry and found a setup and your stop loss, you haven't found a setup that you like, go to sleep and wake back up for New York session at 8 o'clock and do the same thing for that you did during London. Mark your low of the day, which was set at 4 o'clock. You might not have pulled the trade, right? You might not have gotten this buy at 4. Don't get in the trade. Don't get in the buy up here. Don't do that. Wait all the way until 8 o'clock. Even if you think it's starting to pull back, wait. Wait all the way until 8 o'clock and wait until it's time to trade. Because then what do you do from there? You have your low of the day. You pull out a fib to that right there. And now you find your setup. And if you want to look for a buy, what are you going to do? You're going to look for your buy after the market comes underneath the 50%. Now you could be potentially looking for a trade. And you see that after 8 o'clock, I would pull that entry every time. Measure your stop loss. How many pips am I to the low? Risk accordingly. And bam. You like that trade, it pulls back again right in that same level. You pop it again and you might catch your 20, 30 pips on the day. It doesn't move a lot, but that's the setup. And we can see going into the next day, it pushes back up. But like I said, I mean, it's a setup today. This was Martin Luther King. This was today, so it wasn't actually really much to trade. But the setup is the setup. You see how it plays out. Though not everything plays out when you want it to. Like this was a good trade today, even though it was a holiday, but it pulled all the way back, and now it's pushing all the way back up. So, it stayed true to the setup. It's just a matter of time and pricing when you should be trading and shouldn't be trading. So that's looking at that. That's looking at, like I said, when we should be trading and we shouldn't be trading, looking at our institutional levels, what we're potentially looking at going into the week. And like you don't want to look at too many things, right? You want to look at your 2, 3 pairs and that's it, and then stick with that for the whole first 3 months. And I promise you, your 3 months would be looking a lot better than if you were trading, 10 different pairs, 20 different pairs in that 3 month span. So you got to start those habits, now. You got to start them now so that they stick with you all year. And I mean, like I said, I mean, the biggest thing is just starting now. So I don't have too much to say today, you guys. We had a call yesterday. We got a call today. I uploaded both of them. So if you want to, you want to see a little bit more trainings or a little bit more of what we talked about yesterday, go watch that one. From yesterday, I'll upload this call today as well. We have a live trading session tonight for London for the people in that live trading group. So we have about 5 spots left, I think, in that group. It's not nothing. Like I said, I mean, we'll go live. We'll hit our goals. It won't be nothing that's super, intense. That's why I'm not making it $50 for 3 months, less than $1 a session. But look out for that link in the live trading group tonight for London. And we'll have a good week. I'll still be in a regular Forex chat talking to everybody and whatnot. But if you want to get on the call, look at the charts together, listen, just vibe out and whatnot, then, grab a spot in that group. So I appreciate you guys for hopping on. Appreciate the support. I will see you guys for London or New York session in the morning.
Ooh, later.